Alternative lenders prey on people who believe they have no other options, and as a result, they get sucked into a high-interest loan and a lifetime of debt. And there's a negative side. The virus is here, the vultures are circling, and Ted and I have the scary update starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
We are recording this on Wednesday, April 22nd, 2020. For the last month, all of our offices have been closed for in-person meetings, but all of our team is working from home. We're taking phone calls, doing a lot of video meetings, so we're still open for business and helping people. So, what's happened over the last month during the lockdown? Well, the vultures are circling, and that's our topic for today. It's been a month since we sat in our lobby here in Kitchener and recorded our first COVID-19 podcast, episode number 290, which was released on March 21st, where we talked about what was happening. So Ted, welcome back, ready to give us the update.
Right.
Now, for those of you who are watching on YouTube, yes, Ted and I are in the same room, but we are an appropriate distance apart. Don't worry.
I'm not sure what room we're in.
Yeah,
actually.
well, we are here in our head office in Kitchener. The building is empty. And we're on the main floor of our building. Our main office is on the second floor, here in our partially constructed new expanded space. So you and I have to occasionally stop by the office, sign checks, make sure the technology is working. So since we were here, it's like, hey, let's set up the cameras. Let's bring the microphones down from the studio and let's do a podcast. Now, we had planned to spend this week moving into our new office.
I don't think it's ready.
It's not ready, as you can see by looking around. The construction, of course, has been stopped for a month, so it'll be a little while before we get to use it. But we thought, hey, let's use it as a studio today, and so here we are. So let's talk about vultures. We had someone email us who said he had a bunch of loan companies offering him loans of between $500 and $25,000. Hey, times are tough. We can help. So on the Personal Finance Canada subreddit on Reddit, there are lots of reports of emails from lenders with loan offers. There's one from lowestrates.ca, which is a website you can go to compare interest rates and terms on credit cards and mortgages and get car insurance. It's a free website. You give them your email address, and then you can compare different lending products. So, Ted, first question for you. If something is free, what does that tell you?
Well, nothing is ever free. Somebody has to be paying for it. So if you're not paying for the information, someone then is paying for your information. I think you described that as you're the product, not the customer.
Exactly right. You are the product. So now, again, there's nothing wrong with that. We all use lots of stuff. You probably have used Google before, which you don't actually pay for. So, okay. Facebook would be another classic example. Nothing wrong with that.
Right.
We're just pointing out the obvious here. They sent a mass email, or maybe it wasn't a mass email, I don't know, a bunch of people reported getting it, to all their users saying, we've got your back during COVID-19. We've partnered to help you with the financial challenges you may be facing. Get a same-day loan of up to $45,000. Now, again, this is perfectly legal. Nothing wrong with this. People need loans. Lenders make money giving loans. No one's forcing you to get a loan, so I'm not going to criticize a lender for trying to lend. Ted, what are your thoughts on what this type of loan is potentially going to cost you?
Well, so the let's call them the reputable or mainstream lenders, the Schedule A banks, all do loans and advance credit at reasonable rates. And in these times, they are being very restrictive with their borrowing practices, or I guess it's with their lending practices. The ads that are being advertised on this lowestrates.ca, they're selling your name to people that are, let's call them Schedule B lenders. Higher interest rates, more expensive. They're easier to obtain, but they're a lot more expensive to repay. I think the term you used earlier was the vultures are circling.
Well, yes. And again, I don't have anything against vultures either. They're, everyone's got to do their thing, right?
Scavengers serve their purpose
Yes.
in nature. They're a little more difficult when you're talking about people's lives.
Yeah, and we're not here to pick on any one particular lender. Every lender is using the current situation to their advantage.
Right.
And we'll put some of these examples up on the screen. Fairstone, which is a big alternative lender, not even a Schedule B bank, I guess,
Schedule C lender.
But yes, they are a lender, and they've got on their website throughout the COVID-19 pandemic, we're here to help continuing to service service our customers. We're ready and available to assist you by phone during our regular business hours or by appointment only in branches. So the branches are still available. You got to phone in though. You can't just walk in. If you've been financially impacted by COVID-19, call your local branch, speak to a lending. We've got, options and so on, but beware of fraud. Many fraudsters are trying to take advantage of COVID. So be careful. So
it's entertaining that Fairstone, a very high interest lender, is warning you about even higher interest lenders. Deal with us, don't we, with the really bad guys.
And there are lots of other ones. LendDirect is another one. Again, right on the top of their website, they talk about COVID-19. If you're unable to make a payment, give us a shout. And then, of course, you've got the mortgage lenders. So Capital Direct is a big one that advertises quite heavily on TV and other mediums. It says right on their website, our team is working from home. Secure internet and phone access should allow us to remain fully operational. So if you need a mortgage or a second mortgage, which is typically what they're giving,
looking for now,
then they're there. Then there's a company, I'm sure you've heard of these guys, Alpine Credits.
Yes, we've heard of Alpine Credit.
And we won't do a whole show on them. But again, we're working from home, ready and fully prepared to work with all of our clients. So everyone is more than happy to get out there and help you. Now, let's talk about your favorite.
Shall we?
Yes, let's. Payday Lenders.
Yeah, okay.
So there's a company called Mart. You've probably heard of them.
Have?
And on their website, they say, we are experiencing higher than normal customer inquiries.
I'm sure they are.
And they've got a whole page just on COVID-19. We are a financial services company that began with the belief of putting people first, and we will not stray from that mandate during these uncertain times. Well, that's great. I think that's fantastic. We're here to help our customers. Money Mart provides essential financial services.
That's why they're allowed to stay open, because they are an essential service.
There you go. We know now more than ever people need fast, hassle-free access to cash. We remain determined to keep our locations open and be there when you need us. We understand people may be limited in their ability to pay. We're here to help, et cetera, et cetera, et cetera, et cetera. So you think they're here to help?
Well, they're there to help themselves. I think you alluded to that earlier. When somebody needs cash and they don't have access to what I'm going to call traditional credit, you can't put it on your credit card. There's no overdraft in your bank account. You don't have a line of credit, but you got to have money and you think you got to pay the rent. Then you turn to these people. So in a sense, they're there to help, but they're helping the desperate. They're helping the people that have no alternative.
Yeah, or perceive that they have no alternative.
That's a better way to say it.
So here's my question. These alternative lenders, do you think they are taking advantage of the CERB benefit? So as you know, the federal government, through Canada Revenue Agency, has created the Canada Emergency Response Benefit. You're eligible if you live in Canada, you're at least 15 years old and stopped working because of COVID-19, or are eligible for EI or have exhausted your EI since the start of the year and you made $5,000 or more last year or in the last 12 months and you did not quit your job voluntarily. When submitting your first claim, you cannot have earned more than $1,000 in employment or self-employment income for 14 or more consecutive days. It sounds like I'm reading the fine print at the end of the commercial here. I've looked into it. When submitting subsequent claims, you cannot have earned more than $1,000 in employment or self-employment income for the 4-week period. So basically, if I may summarize, if you're not working because of COVID-19 or if you're earning $1,000 or less per month because of COVID-19, you can get $500 a week for up to 16 weeks. Now, I've done some research.
Okay.
Show prep. I did show prep here. So if you go on the Canada.ca website, you can see they publish the stats. And as of April 19th, which is the last time I looked, there were almost 7 million unique applicants for the CERB, and the federal government has already paid out around $20 billion. And of course, a lot of people are getting EI, so that tells me there are many millions of Canadians right now who are not working, which doesn't surprise me. So you would think that because a payday loan is a loan to get to you get to fund your next paycheck, and since there's a lot less paychecks, the payday loan companies would have no business. Is that what's happening?
Yeah, but payday loan companies aren't about payday loans. They're about income loans. So if you have a regular stream of income, you've got money coming in, they will let you borrow against it. And the amount they'll let you borrow against it, well, they'll let you borrow the whole damn thing.
So, and you're right. And we've seen this, certainly.
We've seen this for years. Some of the heaviest users of payday lenders are the folks on government assistance, whether it's Ontario Works or just even EI or other things. It's because those are lenders that it's easy to access. And people don't think through the cost of borrowing from those folks. You need the money today, you borrow from whoever's going to lend it to you.
Yeah, and pensions would be another example.
Right.
We know from our annual Hoyes and Michalos bankruptcy study, we call it our Joe Debtor study, that almost 40% of people who go bankrupt or file a consumer proposal have at least one payday loan at the time they file. So we've just gone through a lot of examples of the non-big bank lenders, all of whom are mentioning COVID-19 on their websites and in their advertising. Do you expect to see these forms of lending increasing during this crisis?
Oh, decidedly. And in fact, when we have deliberately told persons contacting us that let's take a minute, let's look at your situation. Maybe now is not the best time to file a bankruptcy or proposal. But the folks that we are helping the most are the ones that overwhelmingly have these payday lenders, these payday debts, because they're some of the only companies that are still aggressively trying to collect.
Yeah, and that's something we talked about on our first,
show.
the COVID-19, the first show we did, episode number 290, and you made the point that if you're not working right now, nobody can garnish your wages.
Well, and the courts are closed, so nobody can garnish your wages.
They can't sue you, so you don't need to rush out and go bankrupt or file a consumer proposal today to prevent your wages from being garnished because either you're not working or the courts aren't open to do it.
But if you're getting called 17 times a day from a payday lender because you missed last week's payment and they're, well, come in and do something and then we'll immediately lend you the money again. The stress just gets to people. They're already dealing with so many other things in their life, and now they've got these guys hounding them for payments.
Well, and the stress is huge out there. I talked to a couple of people yesterday, one of whom is in the process of recovering from COVID-19, another one who's one of their relatives had gotten very sick from it. So there's a huge amount of stress out there. And the other reason I think that the alternative lenders are going to do well is because you can apply on your phone.
It's easy, and you can do it 24/7.
So it used to be I had to actually walk to the
Had to
place.
shave because you were going to the bank?
Yeah, I've sort of given up, It's like, who cares there, I'm in a construction site. What do you want?
Right.
We're going to be covered in dust by the end of this anyways here. So,
But you're right.
So now you're right. I don't have to get up and shave. I don't have to put on a clean shirt. I can go right on my phone and apply. That is going to help, I think, all of the alternative lenders because they're already set up to do that. And, people have probably been using that technology already.
Well, and there's no delay. So as you were saying, when you had to go apply for credit in a more traditional sense, there's a lag. So you make the appointments, you apply for the credit. They don't tell you immediately. The payday lenders make it all so easy. So there's no second guessing. You don't hit the button and say, well, then I'll come back in 3 days and see if you're going to lend me the money. The idea is that they'll get you the money quickly. So maybe you're doing this late in the evening. Maybe you're doing this after you've been fighting with the kids for the last 3 hours because they're not doing their schoolwork and they're getting.
Have you been fighting
crazy
with the kids, Ted? Your
I
three
don't have
kids?
3 kids, do I?
Yes. What's the oldest? 12 years old or something?
It's going to be 12 in 2 weeks.
There you go. So Ted speaks from experience. But
That's right.
You're under a lot of stress.
And suddenly, I need $500 because I got to get groceries this weekend and government money isn't in yet. So I go, look at that. I go on my phone and I can have it this afternoon.
And so there it is. So yes, I think we both predict that these types of lenders will continue to do well. Now, here's some more show prep I did. There's a company called TransUnion. You've probably heard of them. They do a survey, and they've been actually publishing this on a fairly regular basis. I'll put links to all this stuff in the show notes. They asked a question, what is your plan to help pay your current bills or loans? Interesting question, right?
Right.
So one of the questions was, the first answer was, I'm making partial payments. And that's kind of what we've recommended to a lot of people. Look, if you can't pay your full rent this month, talk to the landlord, pay half of it, work something out.
And prioritize, right? Pay the things that are most important. So if there isn't enough to pay a full payment on something, okay, make a partial payment on something.
Yeah. Buying groceries is more important than, paying for something else.
Right.
So totally. And that's the number one answer. Makes perfect sense to me. The number two answer, 33% of baby boomers said they're going to use money from savings like a TFSA or an RSP, but only 26% of millennials said they would use savings. Probably because
do millennials have any savings?
They don't have any savings. That's right.
Right.
I mean, if you start off life with a big student loan, it takes you till you're 30 or 35 to get out of debt. You're not saving any earlier.
You know what we should have dug up, and I didn't think of this until literally just now. We should have looked to see the old TransUnion surveys were how many paychecks are you away from insolvency? Because people used to be, it was 1 or 2 paychecks away, right?
Well, yes, and the recent survey, because we do see those surveys all the time, and it's like 0 paychecks. Like I am $200 away from insolvency is what everyone's
We're
saying
5
now.
weeks into the lockdown now, and so everybody, we're beyond the I'm missing a paycheck now. I'm in deep trouble.
Right, and that's
what this
and
survey
that's
is
what
saying.
this is all about. So the number 3 answer: how am I going to pay my current bills or loans? Borrow money from a friend or family member makes sense if they've got money. Number 4 answer: use my stimulus check. Now, I suspect this has probably got some U.S. data in it as well.
Sounds like it.
So, well, why is this happening? So we're going to put up a chart on the screen right now, and Ted, you're going to explain it to us. This is the chart of and for those who are listening, don't worry, we'll explain it to you. The average unsecured debt an insolvent debtor has versus the number of insolvency filings. So again, we talked about our annual Hoyes and Michalos bankruptcy study. We've taken all the data, and we've been doing this for a decade and a half. What happens to debt in and around a recession?
So actually, during a recession, debt goes up a bit. But after the recession, debt goes up more, which sounds counterintuitive, but it's once you're finally in a position that you can start dealing with the things that you've deferred, you pile them on as soon as you start working again. So your debt level actually increases.
Well, and you already hit on one of the points. The banks are more restrictive right now.
Right.
So they're cutting back on HELOCs. We've talked about that on previous shows. If you phone them up and say, hey, can I have a $50,000 unsecured line? They're probably not going to be as eager to give it to you as they perhaps would have been 6 months or a year ago.
Right.
So you've got banks that are less restrictive, but then I'm also using debt to survive, and that builds.
Yep.
And so as a result, there's a time lag.
So the analysis doesn't show is so debt increases during a recession, levels of credit does not. So they're not approving you for new credit during a recession. You're using what you have access to. At the end of the recession, they're actually granting new credit, and so you're starting to build the bubble, and that's what you were just talking about.
And so you would expect then that debt levels will be increasing.
Yes, and I expect that'll happen for at least the next 12 to 18 months.
And yet, and I actually got an email from one of the big banks yesterday.
Asking us not to do this show?
No, I don't think she was aware that we do the show. But her question was, what do you think's going to happen to insolvency rates? And I'm going, you're one of the biggest 5 banks in the country, and you're asking me. And what I told her was, well, I think in April and May, there's going to be a huge drop.
Well, yes, of course.
So, a 50% drop compared to prior years. You agree with that rough prediction?
Yeah, and we're seeing it play out. And again, part of the reality of that is that those of us in the profession are telling people, well, wait a minute, do not act hastily. Let's see if we can defer this and buy you some time. But also, it's when there's no pressure from the courts, when there's no pressure from regular collection agencies, at least the financial stress of having excessive debt isn't there. You've got other priorities right now, as you should.
So we expect a slowdown in bankruptcy filings over the next couple of months, and then they probably start to pick up as we get June, July, August, September.
Yeah, we saw a partial decrease in March, dramatic increase in April. I think there's going to be a similar decrease in May.
Yeah, dramatic decrease in April.
Yep. And then once the world starts opening up again, there'll probably be a 60 to 90-day lag, just as people get used to doing things again.
So the fall will be where we see the spike.
I think Labor Day is going to be an interesting weekend. You remember back in 2008, Labor Day is the weekend that everybody turned off the money, and the following week our phones went crazy. I think that's going to happen this year.
Well, and our busiest month up until last year was September of 2009.
Right after the financial
crisis. And now the peak of the financial crisis, of course, was in 2008.
Right.
But that's exactly the point you just made, that there is this time lag as debt builds up. If I lose my job today, I don't have to go bankrupt tomorrow.
Well, it's the same thing the doctors are saying about the COVID virus. The stats we're seeing for deaths today is how bad was the virus infection 2 weeks ago. And so when they're talking about the peak, all of this is information in hindsight.
Yeah, you can't tell until after the fact.
And the same thing happens with finances and money. There's a longer lag, because people can stretch this out longer.
Yep, and that's exactly what we expect to see.
Yep.
So a month ago on the podcast, you said people should not rush to file a bankruptcy or consumer proposal. I assume your advice hasn't changed on that.
I'm still
point.
saying that. I mean, the folks that we are dealing with on the most urgent basis right now are the ones that are dealing with these damn payday lenders, the people that are still hassling them. You got all this other stress in your life. We can at least relieve that for you. Although the first thing we're saying to anybody who calls is, okay, What can we help you with? Do you really sure you need to deal with this right away? Let's prioritize.
Yeah, and open a new bank account at a new bank. If someone already has access to your old bank account because you've given them void checks or post-dated checks or whatever, then the new bank account. And we are hearing reports that some of the big banks are making it somewhat easier to actually do that online.
They are.
But I get conflicting reports because I'll hear that, big bank will let you do it, and then I'll hear another person 10 minutes later tell me they couldn't do it. So you've just got to try. But that's just a standard planning principle. Have a bank account where you don't owe money.
Correct.
And that nobody else knows about. Okay, so let's end the show then with practical advice. So I think you've already, given us the first piece, which is, times are tough. We get it. It's very stressful. You want to pause.
Yeah. Take stock of your situation. Don't do anything hastily.
I would also suggest, and I'm pretty sure everyone has already done this, but make sure you understand what benefits are out there.
Right.
Now, I already read through the whole complicated how the CERB thing works.
Well, and we didn't touch on the fact that these CERB benefits are taxable, but they're not withholding any taxes now. So there's a special surprise everybody's going to get next spring unless the government does some follow-up relief. You're going to owe 25% of this money in taxes.
Yep.
And nobody's setting that aside.
Well, you're going to owe whatever your marginal tax rate ends up being.
Right.
So it's just like getting another $2,000 paycheck.
Yep.
And a lot of people are probably or have done their taxes for 2019. So if you want to see what the impact of it is, pull up your tax program from 2019 and add in, pretend you got another T4 slip with $2,000 on it. A month. So if you got it for 4 months, then, put $8,000 in and see how much extra taxes you would have to pay. Now, obviously, your paycheck will probably also go down for the months because you're not working.
Right.
So it's the marginal difference.
Yep.
Reduce your income, play around with the numbers. But again, you can take a look at your tax return and see, well, I'm in the 20% marginal, 30%, 40%, whatever. That's what you're going to end up paying. So yes, you want to be starting to think ahead to that.
So that's the surprise from the CERB benefit. There's a surprise from the mortgage deferrals because you're paying interest on your interest. There are all sorts of, you need to understand all of these benefits that people are giving you. Know what they are, know which ones make the most sense.
Yeah, and we're not saying don't take advantage of them because your immediate need is today. I need to buy food. I need to do this. So yes, absolutely take advantage of what's there, but beware that there is a cost going forward.
Be careful. And if you don't understand, call and ask somebody that does.
And I think we kind of hit on this with the payday loans as well. Consider all your options.
Right.
So I don't believe that there is, I don't know, maybe I can think of a circumstances where you should get a payday loan, but I'd really have to think about it. And the classic example is, well, my rent is due on the 1st and my CERB benefit isn't going to come in until the 5th. How am I going to pay my rent? And the answer is you're going to go talk to your landlord and you're going to say, I can't pay you till the 5th.
And unless you've been a bad tenant or you got a strange landlord, they're going to work with you, particularly in the current crisis. But just a general rule, if you've got problems like that, communicating with people is a great way to solve them, as opposed to stressing yourself out and looking for solutions that probably don't make as much sense.
Yeah, speak up. It's unlikely you're going to get evicted in the next 5 days. Correct. So make a deal with the landlord. In a lot of cases, people are saying, look, I can give you half the rent. But getting a payday loan and then owing a whole lot more 2 weeks from now isn't going to solve the problem.
Correct.
So make sure you understand all your options. So yeah, and I think my advice would be that, the lockdown will end, I hope. So you want to start preparing for the end.
Yep.
And you gave some good examples there. You're going to end up perhaps owing taxes on your CERB benefit. So you don't need to set aside the money today because you need it for food.
Right.
But in the final 6 months of this year, what can I do when I go back to work? Do I increase my withholdings? What do I do? You want to have that thought process now.
And I mean, this is back from my psych days, so it's, very old data. They used to say it takes 21 days to create a new habit. So everybody right now is cutting back. They're living frugally, but you've been doing it for 5 weeks. And so some of these changes you've made, maybe you can continue to make them after you return to work. And so maybe you've changed the way you spend your money, change your habits so that you've got more money available. Maybe you'll start saving in the future. None of those things you can do right now, but the world is going to be different when we go back to work.
Oh, I totally agree. I think with inflation, it's now 30 days. It takes 30 days to
I Googled it.
That
Some guys are saying 60 days.
There you go.
What do I know?
But you're absolutely right. I've talked to a few people who said, you know what? I used to go out, to dinner all the time. Well, I haven't done that in 5 weeks.
Right.
And you know what? It actually hasn't been that bad because I go to the store once a week. I buy some stuff. I've learned how to cook this and that and the other thing. And if you put a little spices on it, it's actually pretty good. And I've saved a lot of money.
Right.
Now
the problem with this is means a whole lot of people are going to have to find a different way to make a living. So it's like the advice that, what's best for society may not be what's best for you. You individually, reduce your expenses, save your money. But if we all do that, then we're going to stretch this recession out.
Yeah, absolutely. What's best for you is to make your own coffee.
Right.
What's best for society, perhaps, is that you go to the coffee shop and buy the coffee. And again, I'm not saying you should go to a restaurant or you shouldn't. You should buy coffee, you shouldn't. But I think you're absolutely right. This has been what hopefully is a once-in-a-lifetime opportunity for many of us to take a sabbatical.
Right.
We're not university professors who get to take a year off every 7. We have, a lot of us have worked, our entire lives without an extended break.
Right.
Now we're getting it, and you and I are still,
whether we wanted it or not.
We're still working every day, but we're not commuting into the office. Yeah. So, this is interesting. Whatever time I spent commuting, I don't have any. I've saved that time. I'm not using that. Yep. So great. What are you doing with that extra time? Are you getting up and going for a walk? Are you getting in some exercise? Are you reading a book, or are you, doing something less productive with it? And the same on the expense side.
Right.
So, okay, I'm not spending gas for the car because I'm not driving. I'm, cooking more at home, whole bunch of different things. Experiment with them now.
Right.
And then you can hopefully carry some of those positive things going forward.
There you go.
Excellent. I think that's a great way to end it. And as Ted said, we are still completely open for business, not in person, but by phone, by video. Right. You and I have become quite expert at doing video meetings.
Skills I never thought I would have.
That's right. We're quite happy to do it. So if you are stressed out about that, then reach out to us. That's what we're here for. Our website is hoyes.com, HOYES.com, and you can contact us through there. We are happy to tell you what we think.
And we'll get through this together. Happy Earth Day.
Absolutely. Ted, thanks very much for being here. That is our show for today. Until next week, I'm Doug Hoyes. That was Debt Free in 30.